If you trade stocks, you know that earnings can be a wild ride. Big rewards, but there can also be big risk. Unless you know how to use risk defined option strategies that take advantage of volatility crush and theta decay. That's why it's so important to know when earnings are coming up and what to expect before you jump into a trade. I used to spend hours poring over charts, reviewing historical data, and toggling between websites for estimates. Then I simplified the process with the earnings hot zone tool. It shows me exactly when earnings are happening, how the stock has reacted in the past, and what kind of move the market's expecting this time at a glance. Let's use AMD as an example. If you look at this ticker, what you'll see is that it's not that consistent over earnings, right? You have some gaps. Most of them are lower. Yeah, sure, there was a big gap higher right here. But what we can also see through this data is we can see how big the percentage moves generally are. 3.7%, 6.5%, 8.9%, 8%. But you know what was interesting about AMD is it was already down 3% before the earnings report. So what I did was I came in and I said, you know what? This tool is telling me that this ticker is probably going to have around a $15 expected move, but I think that's a little bit high. So what I'm going to do is I'm going to sell some premium. I sold the calls and the puts and bought the outer wings as protection. And I traded this for a vol crush event. What ended up happening was that AMD only moved 2.7% over this earnings report. And I was able to buy this back for 25% profit overnight. That's what you have with the earnings hot zone. You have opportunities where you can identify moments where you can sell premium, and you have moments like this. But this one has a pretty consistent bullish trend to the upside. So I also use it to buy tickers before an earnings report.